Hey everybody, this is DayTraderRockStar, and this is a market update. Now, typically I'll do what's called a market radar discussing upcoming markets going out about 1 to 2 days. A radar is usually kind of taking the technicals on that 60-minute time frame, the daily and stuff. But let's just go back here and start over. Let me talk about the markets. The markets have dropped off. We know that. I came back from vacation. I put out a little update on. I did a market radar and talking about what do we have to go by here? It's obvious the market is broken back down here, and it's obvious that everyone's blaming China, and China fears of the slowdown and everything. So we've had a market react to that, but there's one event that continues to repeat itself, and I've discussed this, and I continue to discuss it. It's just that each time we have gotten oversold in this rally, and oversold using the stochastic oscillator to really judge momentum and the shift of momentum. And we could go back, and like I said, I just keep on talking about this because it's so obvious. And when we see something so obvious, the question becomes, do you just continue to use it until it stops working? Well, here's our recent rally, and we'll go all the way out as far as this chart could go back down to 2013, into 2013 into 2014 and 15. So going back over 2 years, and each and every time that we've gotten back down into an oversold level using the stochastics, we've had a tremendous bounce and typically break into new highs. And I think in most cases we did. Maybe that we started getting up topped out here. Now, what happened is we got a reaction down. We dropped down pretty hard, 1,000 points in a day. I mean, it was historic. But up here, when we talk about what might have helped cause this, we've been going sideways for about, 6 months, going on to 6 months. Really no interest in the market. The range has been really small. The volume has dropped off. The VIX was getting murdered. Everything pointing to just a dead market. And when a dead market's out there, there's no conviction to buy. There's no real buyers out there. Hence, you have some news here, and all of a sudden you trigger something. Something triggers, and because of this, the liquidity issues that was in the market, no interest, no volume, the algorithms here just kicked in here, and then it just snowballed down real fast. And a classic example of something very similar to the flash crash. It was just, it happened so fast. We could go back and take a look at some of these candlesticks that have been left behind, and it's just, it's. You could tell that, by seeing some of these, it's tremendous big candles that could spike all the way down 7, 6, in some cases 8 points on $20 stocks, third of the price given back. Really. And then it bounces all the way back. A pure sign of computerized trading and algorithms just gone haywire. So that leaves us off, with a situation that we got oversold. We got oversold. And hence, we talked about it. We knew it was there. Yet, did you believe it 100% that it was going to bounce aggressively off of it, or did you just kind of grab onto what the news is telling you and saying, "Oh, this is something else that's going to happen. This is going to affect us. Market needs to go down more." And not to say we're not finished from going down, but when you talk about a timing tool, and you talk about an area to start to pay attention to, it doesn't matter how we got down there. The fact is, we just got oversold. And we didn't waste a day before turning around aggressively and pushing back and getting some follow-through. It is what it is. Mark that down for another successful bounce, and the streak continues with the oversold stochastic. Now, of course, the daily is on your side now. You got to bounce. How far is it going to go? Well, like I said, these algorithms here kind of controlling some of the trading these days, and that's blowing things out of proportion. We're getting a big rally back up here, and this could easily continue. But then the downside is just as appetizing. So at this point right now, seeing that the 60-minute chart has been just got overbought. We've been, hanging up here, but there is a sign of strength. It's just kind of up in the air here, and it's a shame that at some points there is going to be that type of trade where you just get a lot of volatility and have to let things really play out, because I think some of the moves are going to be a little bit more exaggerated. The overall look at things right now, if we could just say, 60-minute embedded, the type of rally we had today where we are and where we left off. I'm still looking at the good possibility of a bounce, but definitely setting up back up here with a hedge in case we get a push back down. So, that's where we're going to leave off tomorrow. We might actually gap up tomorrow. We're going to look at this underlying trend line, this blue line. This will be our first retracement trend line, and that gets us back up over 2,000. So, we talk about 2,000. I discussed this on the radio a lot today. It's like, what is that magic number where the market realizes that this is not a correction, but a mistake? A correction, a correction. This is a fast correction if it is one. But also, is it just a malfunction of the system and the way we got down to that level? We could revert right back up to this level. And I have a feeling if we're going to have some upside, we're going to get back above 2,000. Not an issue, but all the way back up to that 2,020 zone. Where we start to run into some recent levels. So that's a big positive for this market and a good way of doing it. But before that happens, with that 60 here chopping around, if there is any news out on China, that's going to affect us, any other news out there. So it is going to be a little bit more volatile, but that doesn't stop us because trading has been great. It finally get an opportunity to really start to see things start to come together. Very hard after, that first 5 days of selling. But now, 2 days into a kind of a base and then a follow through and a bounce, we're going to start putting some ranges in here. We go back to that 5-minute chart. We only had one oversold level today, really. We had a small bounce and a failure, but this really curled back down to the 200 and we bounced. It was a very strong day. We weren't paying too much attention to that, knowing that 60 was extended. So here's our 60. At the end of the day, we kind of rallied back up. It's going to be an interesting call for Friday tomorrow. And also, it's going to be the end of the month. Monday will be the 31st. Historically, Septembers have not fared well. It's the worst performing month on the S&P of the year. So there's a lot of things out there. And I think what we have to do going forward is kind of prepare ourselves with a little bit more of a hedging bet up here. There is some opportunities, like the Disney has come back down. And I think there's always going to be opportunities in this market that things have probably pulled back a little too far. And we're going to see it revert back to their original patterns and stuff. Procter & Gamble, I have a couple that I'll be putting out in this week's video. But whenever we have an established trend line and we kind of roll over and flush through it, the odds of and especially in a stock like this, there's a great chance that we're going to actually push back up into that pattern. So it gives us a good target to look for. It gives us a trading plan. So is that move from $2 move in here, $1.50, is that worth a trade for you? That type of scenario, it looks good. So we're going to be concentrating on those type of stocks going into the next week. Even American Express, which is divergence, there's a couple other divergences we're going to look at, all coming out on the watch list for the members, and I'm going to be doing that tomorrow. But going out, just taking a look at market radar. And looking at the overall markets in general, was this a mistake? Was it a correction? If it was a mistake and people are jumping right back on and we're going to revert right back up to those levels again, that tells you something about the market. It tells you something about what's going on. And, is there a buy to dip attitude that is very strong out there? I mean, this is going to be an interesting to see how far we bounce on this. Very curious to myself. Definitely see the opportunity of a push back up here. I think I'm weighing on that a little bit higher than maybe a chop back down to lows, but both the options are open at this point, and that's the only thing that makes it a little bit more difficult to call a kind of a trend market when you get this type of range. Looking good though. Let's just take a look at the S&P futures, and remember the movie Horton Hears a Hoot? A little Dr. Seuss for you. Well, Horton Hears a Hoot, and I've watched it many times with my kids, but I've never really paid attention to it. I'd watch it, but I wouldn't be full focused on it, and I might be distracted. So I pick up pieces of the movie here and there after watching. I get an idea, but basically, he has this was it a flower or something very small, and on top of that, on that thing in itself. There's a whole world That represents a whole world, but no one can see the whole world because all you see is the small little thing. Well, this is kind of what we do each day here at Day Trader Radio. Try to identify what happens over and over in the markets. Giving you an edge when we cover the futures. We cover all stocks also, but as we in each scenario, be it a stock, be it the futures, be it an ETF, we'll break all those trades down in a similar way. They all work together. Recognizable patterns, divergences. We have a special set of indicators that we developed using the stochastic bands, multiple time frames. Really good stuff. And we talk about the retracement, measure that out, understand the retracement plus maybe a 1, 2, 3 pattern, and then seeing that channel break to the upside and understanding why that channel broke to the upside. There's a lot of interesting things that we go into. And then once we broke out here, we actually, you can see what's happened here. We had this larger rise in wedge, and it finally broke down and retested it, broke down, retested, and finally rolled over. And then from that point on, we had a bounce here. It was a triple stochastic bounce, and then there was something going on down here. We didn't really look into it because we started rolling over. We started taking a bigger hedge here. So we are hedged for some downside. But then, last hour rally, out of nowhere, an impressive rally, 40-point rally, and that's where we left overnight. So tomorrow, hopefully we get a little more, bigger swings, many of them. These are big swings. We look back at it, 2 big swings during the day. You had a nice move down and a nice move up. All right, so that's about it. I just want to touch base with everyone. I'll be broadcasting actually a little bit later tonight as I do some more research. I was going to start that around 7 and change, but don't forget, I'll be broadcasting tomorrow too, live. So I'll see you in the chat room. I'll see you out there on Radioland, and we're gonna do good tomorrow.